In the previous video, we went over the cash flow statement, what's the purpose of the cash flow statement, and we talked about what you need to create the cash flow statement. And now in the second part of this cash flow term series, we're actually going to go and look at the parts of the cash flow statement. So here is the cash flow statement, and you'll see we have the first section is net cash provided by operating activities. Then we have another section called net cash provided by investing activities, another section called net cash provided by financing activities, and then we have a reconciliation section here, which is the net increase or decrease in cash, and then the beginning cash balance and ending cash balance. So the first thing we're going to look at is what is cash flow from operating activities, and this, some would argue, is the most important component or part of the cash flow statement. And so the net cash from operating activities tells how much cash came from selling goods or providing services, or how much of the net income is actually cash. So a really good example of this is if you look at Barnes & Nobles, right? From the cash flow from operations, it would tell you how much cash Barnes & Nobles generated from selling books, or how much cash Apple generated from selling Apple products. And again, I can't emphasize this enough. When you look at the income statement, the net income number does not tell you if that is the amount of money the company actually received with cash. It just tells a profit number. It tells you, here's what we sold, here's the value of the stuff we sold, minus the cost that we incurred to sell that stuff, and we have a profit if it's positive, we have a loss if it's negative. The cash flow from operations starts with the net income number or the net loss number, and it makes adjustments to that number to come up with net cash from operating activities. So the cash flow from operating activities tells you how much of the net income on the income statement is actually cash, how much cash this company was able to generate from selling goods and providing services. Okay, then we have the net cash from investing activities. The net cash from investing activities is this second section right here. Okay, this section is the net cash from investing activities. You see cash flow from investing activities. And what that tells you is how much cash was received from the sale of long-term assets, or how much cash was used to obtain long-term assets. Long-term assets are land, building, furniture. If you spent cash to get long-term assets, it's going to show up here. If you received cash from selling long-term assets, it's going to show up here. All right? And then you have cash flow from financing activities, and that tells you how much cash was received from incurring long-term liabilities, how much cash was used to pay off long-term liabilities, how much cash was used for received for selling equity, how much cash was used for buying equity or common stock. So basically, the cash flow from financing activities looks at long-term liabilities and equity. If you borrowed money and received cash, it's going to show up in this section. If you sold stock and received cash, it's going to show up in this section. If you paid off a loan, it's going to show up in the cash flow from financing activities section. If you bought back your own stock, which is treasury stock, which we'll learn about later, it shows up in this section. Okay, so the three sections of the cash flow statement are cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. And there's a handout which I'm going to refer you to later in the course or later in the other lectures that's going to show you exactly step by step how to complete the operating activity section, investing activity section, and financing activity section. The section below on the cash flow statement is the net increase or decrease in cash, and I'll show you what that looks like. So after you calculate operating activities, investing activities, and financing activities, you have this section at the bottom, which is the net increase or decrease in cash. And so how do we get that? Well, the net increase or decrease in cash is basically the sum of the cash flow from operating activities, investing activities, and financing activities. So you'll have one number for operating, one number for investing, one number for financing. You add these three together, and that is the net increase or decrease in cash, or what we call the net change in cash. Well, what does that net change in cash mean? Well, if you look at the bottom of the cash flow statement, there's two things. There's the beginning cash balance and there's the ending cash balance, right? So the beginning and ending cash balance, this tells us here's what our cash was in the beginning, here's what our cash was in the ending. If you take the difference between those two, it will equal the net increase or decrease in cash, or the net change in cash. So one of the things you can do, just like on the balance sheet, you can look at assets and compare it to liabilities and equity to make sure your balance sheet balances. On the cash flow statement, the net increase or decrease in cash you take from operating plus investing plus financing. So you add those three together and you get the net increase or decrease in cash. Well, that number should also equal the difference between the beginning cash balance and the ending cash balance. So basically, you're going to add the operating number, the investing number, and the financing number, and you're going to get this net change or increase or decrease in cash. But then you can check if that number is correct by taking the beginning cash balance and the difference between the beginning cash balance and ending cash balance, and the difference between those two numbers should equal the net increase or decrease in cash. All right? So these are the terms that you should be familiar with when you're dealing with the cash flow statement, and we'll see more specific examples of this as we go into building the cash flow statement.